Now, dito nyo matutunan ng accounting sa viewpoint ng parent at sa viewpoint ng subsidiary. And it is also possible na yung dalawa, parent and subsidiary, nasa different locations sa globe, ano? So, what I mean is, merong foreign, merong local. So, kung ganon, may mga transactions between the parent and subsidiary, magkakaroon din ng mga foreign exchange transactions na subject to translation, lalo na yung parent subsidiary, siyempre meron yung kanya-kanyang financial statements, so consolidate mo. Tapos yung iyong mga subsidiaries overseas, at ibang currency, no? So, kakaroon ka ngayon ng translation of the financial statements of subsidiaries using foreign currency. Yan ang ma-encounter nyo sa business combinations, no? And sa board, isang subject yan. Yan ang tinatawag nilang Practical Accounting 2, Part 2. Practical Accounting 2. Together with accounting for special transactions. Yung dalawang yan magkasama. So sa board, ang tawag nila Practical Accounting, Part 2. Now, in the batches earlier than you, ang tawag nila Advanced Financial Accounting. Advanced Financial Accounting. Now ngayon, pinalitan ng pangalan, ginawang Intermediate Accounting 3. Intermediate Accounting 3. Hindi. Pangalan nila, Accounting for Business Combination. Ngayon. Pero yan ay, dati-dati ang tawag dyan ay Advanced Financial Accounting. At sa board exam, sakop yan ng Practical Accounting 2. Okay? Now, because this is a board subject, ay hindi madali, no? Hindi madali. At marahil maintindihan, kaya lang, pagdating sa board, sa dinami-dami, lawak ng area of study, hindi mo na rin masagot, ano? Kapag nakaupo ka na doon, under time pressure. Now, in this course, I'm sure that everybody will be having a clear understanding of the chapters that accounting students will learn. And I see our textbook is more than enough to serve that purpose. Now this evening, meron tayong 3 reporters to open the gates for us, for everybody to see in the tour the kaloob-looban ng business combinations. So, welcome everybody to the course. Start learning. And I hope you enjoy the learning of business combination. Who is the first to report? Dison, you may start. Michaela.
Good evening po.
Okay, good evening.
Business combination defined. IFRS 3 defines business combination as a transaction or other event in which an acquirer obtains control of one or more business or the acquiree. For each business combination, one of the combining entities shall be identified as the acquirer. IFRS is the business combination are accounted for using the acquisition method, which generally requires assets acquired and liabilities assumed to be measured at their fair values at the acquisition date. Yung acquisition date po is the date on which the acquirer obtains control of the acquiree. Acquirer, tagakuha, company that obtains the rights to another company or business relationship through a deal. Yung acquiree po ay nakuha, company that has been bought by another. Identifying a business. A business is identified A business is defined in the standard as an integrated set of activities and assets that is capable of being conducted and managed for the purpose of providing a return in the form of dividends, lower cost or other economic benefits directly to investors or other owners, members, or particular. The standard clarifies that a business consists of inputs and processes applied to those input that have the ability to create outputs. Input is any economic resources that creates or has the ability to create outputs when one or more processes are applied to it. This may include intangible assets or right to use non-current assets, intellectual property, the ability to obtain access to necessary material or rights and employees. For example is non-current assets or intellectual property. Process is any system, standard, protocol, convention, or rule that when applied to an input or inputs, creates or has the ability to create outputs. Example is strategic management process, operational processes, and resource management processes. Output is the result of inputs and processes applied to those inputs that will provide or have the ability to provide a return in the form of dividends, lower cost or other economic benefits directly to investors or other owners, member or participants. Although business usually have outputs are not required for an integrated set to qualify as a business. For example, an integrated set of activities and assets in the development stage might not have outputs. In such cases, the acquirer should consider other factors to determine whether set of activities is a business. This includes whether the set of activities A has begun planned principal activities. B. Has employees' intellectual property and other inputs and processes that could be applied to those inputs. C. Is pursuing a plan to produce outputs. And D. Will be able to obtain access to customers that will purchase the outputs. Not all of these factors need to be present for a particular integrated set of activities and assets in the development stage to qualify as a business. Although most businesses usually have liabilities, a set of integrated activities need not have liabilities to qualify as a business. The standard takes the view that, in the absence of evidence to the contrary, a particular set of assets and activities on which goodwill is present shall be presumed to be a business. However, a business need not have goodwill.
Okay.
Illustration 13:1. On January 1, 2017, Entity X purchased two separate sets of assets and activities from third parties as follows. First, a manufacturing plant of a company. The set of assets acquired and liability assumed are as follows. Plant premise 100 million pesos, machinery 50 million pesos, equipment 20 million pesos, mortgage loan secured on the plant premise 90 million pesos. Entity X will continue to employ the existing employees of the manufacturing plant, paying them the same salaries as before. The plant is a cash generating unit which generate outputs that are sold to outside customers. Entity X pays cash consideration of 100 million pesos to the vendor. Second, a set of assets and liability of B company as follows. Factory premise 60 million pesos, machinery 20 million pesos, equipment 20 million pesos, loan secured on the factory premise 50 million pesos. The vendor will retrench the existing employees of the factor and pay their termination benefits. The set of assets is not capable of generating independent cash flows. However, Entity X believes in cash. It can use this set of assets to obtain economies of scale with its existing facilities. It pays a consideration of 55 million pesos to the vendor. As the end of the prior financial year, December 31, 2016, the summarized statement of financial position of Entity X is as follows. Plant premise 200 million pesos, machinery 100 million pesos, equipment 20 million pesos, current asset 50 million pesos. In total is 600 million pesos. Current liabilities 100 million pesos, long-term loans 200 million pesos. Total liabilities is 300 million pesos. Share capital 100 million pesos. Return earnings 200 million pesos. Equity attributable to owners 300 million pesos. Total is 600 million pesos. Required A. Explain how Entity X shall account for the purchases of the two sets of assets and activities, and B. Prepare the statement if financial position of Entity X as of January 1, 2017, immediately after the acquisition of the two sets of assets and activities.
Okay. Okay. The second that, okay. Class, do you have any question? The opening paragraphs of the chapter. Okay. Next, reporter.
Solutions in illustration 13:1. The set of assets and liability of the manufacturing plant shall constitute a business as all the three elements of inputs, processes, and outputs are evident. The plant was separate cash generating unit of the vendors and it was acquired as a business with an element of goodwill. Therefore, Entity X shall apply IFRS 3 and account for the acquisition of manufacturing plant as a business combination with goodwill being measured at 20 million na na-compute yung 20 million dahil sa 1 million less the net assets of 80 million. The net of assets and liabilities in the second acquisition cannot be identified as a business because none of the three elements of inputs, processes, and outputs are evident. Entity X will only use them together with its existing facilities to achieve economies of scale. Therefore, it shall be accounted for an asset acquisition as the cost paid for this set of assets exceeds the net carrying amount. Entity X allocated the cost as follows. So sa A po, ang ang hinahanap po dito yung magiging allocation po ng entity X sa cost. So, factory premises is 63 million. Nakuha yung 63 million dahil dun sa 16, ito yung value ng factory premises. Tapos yung 0.6, ito yung percentage or ratio nito, ratio share nito sa total amount of assets. At yung 5 naman, yun yung differences ng 5 million consideration sa vendor at ng total amount ng set of asset and liabilities. Ganon din po yung process sa machinery at equipment. Sa mortgage loan naman po, sa mortgage loan po, kaya po hindi siya kasama hindi po siya kasama sa allocation po ng cost po dahil ito po liability, hindi po siya asset. Ang mangyari po ay factory premises 63, machinery 21, equipment 21, mortgage loan, ima-minus po yung mortgage loan sa 63, 21, 21 at equals to cost of purchase 55. Sabi naman po, ang hinahanap naman po sa BI yung financial position po ng entity X as of January 1, 2017. Yung current assets 95 million, yung 250 po na nakuha po siya sa current assets dun po sa current assets sa financial position po nung 2016. At yung minus 155, yun po yung cost of, yun po yung 100 million plus 55 na cost of purchase. Ito po. At yun nga po, 95. And yung plant and factory premises, 200 plus 100 plus 63 is equal to 363 million. Yung 200 naman po, yung nakuha po siya sa plant and factory premises sa 2016 financial position po. Plus 100 100 million yun yung plant premises at yung 63 naman yung factory premises. Kaya nakuha yung 363. Yung machinery naman po 100 yun po yung machinery sa 26 financial position. Yun po yung machinery sa 2016 financial position. Tapos yung 50 naman po yun yung machinery sa A company plus 21 dito po. Kaya po nakuha yung 171. At yung equipment 50 sa financial position din po plus 20 yun yung equipment sa a company plus 21 dito rin. Kaya nakuha yung 91. Yung goodwill on combination yun yung measurement ng goodwill kaya ito na yung 20. Kaya 95 plus 363, 171, 91 million, 20 million is equal to total assets of 740 million. Yung current liabilities naman, nakuha siya sa financial position ng 2016. Long-term loans, 200 plus 90 plus 50. Yung 200 million na yon nakuha rin siya sa 2016 na financial position. Tapos yung 90, yun yung mortgage sa A company, tapos plus 50, yun yung loan secured sa B company. Kaya nakuha yung 340. Plus share capital at retained earnings na 200 is equal to total liabilities and equity of 740 million. Acquisition of control. Control of another company may be achieved by either acquiring the assets of the target company or acquiring a controlling interest, usually over 50% in the target company's voting common stock. In, in an acquisition of assets, all of the company's assets are directly from the company. In most cases, existing liabilities of the acquired company also are assumed. When assets are acquired and liabilities are assumed, the transaction is referred to as an acquisition of net assets. Payment may be in cash, exchange property or issuance of either debt or equity securities. Business combination may be achieved legally either by statutory consolidations or statutory merger. Statutory consolidation refers to the combining of two or more existing legal entities into one, one new legal entity. The previous companies are dissolved and are then replaced by new continuing company. A statutory merger refers to the absorption of one or more existing legal entities by one existing company that continues as the sole surviving legal entity. The absorbed company ceases to exist but may continue as a division of the surviving company. In stock acquisition, a controlling interest, typically more than 50% of another company's voting common stock, is acquired. The acquiring company is termed as the parent, also acquirer, and the acquiring company is termed as subsidiary, also the acquiree. Both the parent and subsidiary remain separate legal entities and maintain their own financial records and statements. However, for example, for external financial reporting purposes, the companies will usually combine their individual financial statement into single set of consolidated statement. Yung ano po, yung parent po is mas mataas sa subsidiary. Under po siya ng, yung subsidiary po, bale, magiging under siya ng acquiring o kaya parent. Yung acquisition assets po, ito po yung ano, sabi po sa acquisition assets, lahat daw po ng company's assets ay ay nanggagaling mismo sa company. Ang um, ang transaction ay naka-referred as an acquisition or of net assets. Ang bayad dito ay pwedeng in cash, exchange property, or issuance of either debt or equity securities. Sa methods of business combination naman po, meron pong dalawang, bago po ma-issue ang IFRS 3, may dalawang methods na ginagamit na accounts para sa business combination. Ito ay ang purchase method and pooling of interest method. Ang purchase method, ito yung all assets and liabilities of the acquired company are usually recorded at fair value. The purchase method was primary method is used. However, under some cases, pooling of interest methods was allowed. The pooling of interest recorded assets and liabilities of the acquired company at their book values. IFRS 3 eliminated the pooling of interest method. Acquisition method of accounting for business combinations. IFRS 3 requires all business combinations be counted for by applying the acquisition method called the purchase method in 2004 version of IFRS 3 to determine whether a transaction or other events is a business combination. First step in the application of the acquisition method are to be used as follows. First, identify the acquirer. Second, determine the acquisition date. Third, determine the consideration given, price paid by the acquirer. Fourth, recognize and measure the identifiable assets acquired, the liabilities assumed, and any non-controlling interest, formerly called minority interest in the acquiring. Any resulting goodwill or gain from a bargain purchase should be recognized. First, identifying the acquirer. In an assets acquisition, the company transferring cash or other assets and or assuming liabilities is the acquiring company. In stock acquisition, the acquirer is In most cases, the company transferring cash or other assets for controlling interest in the voting common stock of the acquiring company being acquired. Some stock acquisition may be accomplished by exchanging voting common stock. Usually, the company issuing the voting common stock is the acquirer. In some cases, the acquirer may issue the stock in the acquisition. This acquisition, this reverse acquisition may be occur when publicly traded company is acquired by privately traded company. The appendix at the end of the chapter in this case and provides applicable accounting procedures. Dito meron tayong reverse acquisition nagpapalitan publicly or by privately traded company. Yung acquiring company ang nagtatransfer ng cash or other assets o assuming liabilities. Sa stock acquisition, ang acquire naman ay ito yung pagta-transfer ng company's cash or asset para sa controlling interest ng voting common stock para sa acquiring. Determine the acquisition date. This is the date on which the acquirer obtains control of the acquiring. IFRS 3 explains that the date on which the acquirer obtains control of the acquiring is generally the date on which the acquirer legally transfers the considerations, acquires the assets, and assumes the liabilities of the acquired the closing date. However, the acquirer should consider all the pertinent facts and circumstances in identifying the acquisition date, and it might be that control is achieved on a date that is earlier or later than the closing date. For example, the acquisition date precedes the closing date if a written agreement provides that the acquirer obtain control of the acquiring on the date before the closing date. The acquisition date is critical because it is the date used to establish the fair value of the company acquired. And it is usually the date that fair values are established for the accounts of the acquired company. Determine the consideration given. Generally, the consideration given, price paid by the acquirer, is assumed to be the fair value of the acquired as an entity. IFRS 3 requires the consideration given in the business combination to be measured at fair value. This is calculated as the sum of the acquisition date fair values of first the asset transferred by the acquirer, second the liabilities incurred by the acquirer to former owners of the acquiring, and lastly the equity interest issued by the acquirer. Usually forms of consideration include cash, other assets, contingent consideration, ordinary or preference equity instruments, options, warrants, and member interests of mutual entities. Contingent consideration. A contingent consideration is defined in the standard as usually an obligation of the acquirer to transfer additional assets or equity interest to the former owners of an acquirer as part of the exchange for control of the acquiree specified future events occurs or considerations are met. However, contingent consideration may also give the acquirer the right to return of previously transferred consideration if specified conditions are met. The specified future events may be in the form of meeting specified level of earnings, which reaching a specified share price or reaching a certain milestone in development projects. Contingency in a business acquisition may take form of an additional consideration payable by the acquirer to the former owners of the acquired, conditional upon the acquirer achieving a certain maintainable profit. Another contingency is in the form of guarantee of the value of securities to the former owners of the acquired. If the value of the original securities issued fall below the guaranteed value. The standard clarifies that the consideration that the acquired transfer makes use of for the acquired includes any sets or liabilities resulting from contingent consideration arrangements. The acquirer shall recognize the acquisition date fair value of contingent consideration as part of the consideration transferred in exchange for the acquire without regards to the probability of contingency crystallizing in the future periods. The acquirer shall classify an obligation to pay contingent consideration as a liability or as equity on the basis of the definitions of an equity instrument and the financial liability in IAS 32 financial instruments. For example, if the contingent consideration takes form of issuing an additional equity instrument, it shall be classified as an instrument, as an equity instrument. A contingent consideration included in the cost of combination, which relates to a probable cash amount payable in the future, shall be measured at its present value by discounting the future amount at the acquirer's current borrowing cost.
Okay. So, tapos na ba? Okay. Oh, Okay. So, tapos na. Now, where is Aguila? Answer my question. Aguila, are you there?
Hello po, sir.
Okay, answer my question. What is the difference between statutory consolidation versus statutory merger? Jacqueline, nandiyan ka ba?
Wait,
What is the difference between statutory consolidation versus statutory merger?
yung sa merger po, ang alam ko po is yung parang nagko-combine po yung isa, nagko-combine po sila. Parang magka-separate po sila, pero pagdating po sa stock, magko-combine po sila. Ganun po yata ang alam. Ganun pa. Tapos yung acquisition naman po.
Okay, I repeat the question. You mentioned about statutory consolidation. You mentioned the statutory merger. Anong pagkakaiba sa ganitong dalawa? Statutory consolidation.
Yung yung sa merger po, yung po, dalawang nakaseparate po na entities, magko-combine po ng forces para bumuo ng isa or mag-join po as isang organizations po. While yung acquisition naman po, yun po yung nagte-take over ng isang one entity by another po.
Oh, hindi. I repeat my question. O, tanggalin na natin yung statutory, pero yung dalawa, parehong yan, statutory. Ang isa, consolidation, isa, merger. Anong pagkakaiba ng dalawa?
Yung yung sa statutory merger po, ito po yung dalawang pong nagma-merge po na company pa na kailangan sumunod sa statutory laws po and compliance. Yung sa statutory consolidation naman po, yung nagko-combine po into a new entity po para po sa original companies po na mag-exist. Parang ganun.
Okay. Who can say it in a more clearer words? Anybody from your group mates? Okay, Rain. Okay. So, ang pagkaiba ng merger sa consolidation, sa merger, so, nagko-combine ang two or more entities na yung isa doon magsusurvive to continue the business operation. Kunwari, Company X and Company Y nag-merge. After merging, nawala na si Company X. Ang natitira na lang ay si Company Y. So, merging yun. Consolidation, two or more entities Kaya lang, after consolidation, lahat nawala para mag-form ng panibago. Now, for example, the X and Y nag-consolidate. Parehong nawala. Pero in their place, nag-form sila ng bago. Kunyari, W. Yun ang binuo nila. So, bago ang pangalan. Yun ang consolidation. Okay. Saan si Jackie? Jackie, another question.
Yes po, sir.
Kailan nagkakaroon ng reverse acquisition? Kailan nagkakaroon ng reverse acquisition?
Pag nagpapalitan po publicly, pag ano po, yung acquiring company po nagta-transfer po ng cash or other asset.
Hindi. Kailan nagkakaroon ng reverse acquisition? Tinawag na reverse. Reverse acquisition. Jackie, you call a friend. Jackie, call a friend.
Yun lang po, sir.
Anybody from the group can answer the question. Kailan nagkakaroon ng reverse acquisition? Ray? Sagot nga ng tanong ko. Okay. Now, reading the pages of the book, ano? Okay. So, acquisition. One, the acquirer acquiring the acquiree, no? Nagkaroon ng acquisition, no? Now, one pamamaraan para makuha ng acquirer ang acquiree. Itong acquirer, nag-i-issue ng additional shares of stock. No? Tapos ipapangalan sa acquiree. So, yun ang kabayaran ng acquirer sa business ng acquiree, no? Naging owner ang former owners ng acquiree sa acquirer. Ang kapalit noon, ikukuha nila ng acquirer yung acquiree. So, normally, ganun ang nangyayari kapag tinatawag nilang stock acquisition, no? Gamit ang shares of stock. Ang nag-i-issue ng new shares ay ang acquirer in the name of acquiree. So magiging shareholders na ang former shareholders ng acquiree. In return, ang makukuha ng acquirer ay yung business ng acquiree. Okay? Sabit na cash, stock transaction ang ginawa. So that is the usual acquisition using the stock acquisition method, no? Yun ang normal. Now, it is possible naman yung acquiree mismo ang mag-i-issue ng stock sa pangalan ng acquirer. To the point na ang majority ay nasa acquirer. Ang acquiree ang mag-i-issue ng shares of stock. So, baliktad. Normally, ang nag-i-issue ng shares ay yung acquirer. Sa pangalan ng acquiree, ang kapalit ay yung business ni acquiree. Ito naman, ang ginawa naman ni acquiree, siya nag-issue ng stock. Shares of stock. Sa pangalan ng acquirer. Baliktad. Doon sa ginawa ng acquiree, yun ang tinatawag na reverse acquisition. Reverse acquisition. Okay. Meron pa akong ikatlong tanong kay Jackie. Okay. Now this is the third question. Kasi nagkataong maraming laman yung portion ni Jackie, no? I have a third question, Jackie. Nag-mention ka ng acquisition date, no? Or date of acquisition. Minention mo rin yung the closing date of acquisition. So yun, minention mo yung date of acquisition or acquisition date. At meron ka rin minention na closing date of acquisition. Tanong ko, Jackie. So there are two phrases, date of acquisition and or acquisition date. At nag-mention ka ng closing date of acquisition. So, magkaiba, no? Sa words, ano ko lang sa iyo, Jackie, kung may pagkakaiba yung dalawa, anong pagkakaiba, Jackie? Date of acquisition or acquisition date versus closing date of acquisition. Jackie. Anybody from the group? Ray, sagot mo eh. Sagot ka ulit. Okay. So, okay, correct, ano? Correct. So, magkaiba yung dalawang yon. Yung pinagkabili yan eh, no? Yung A, binili yung B. Siyempre, yung A, magbibigay. Yung B, tatanggap. Now, yung date, kung kailan tinanggap ni B, whatever consideration from A, yung tinatawag na closing date. Closing date. Ano naman yung date of acquisition? Ang date of acquisition naman ay kung yung date na yung A, kontrolado na yung si B. Control. No? So, date of acquisition, kailan mag-i-start yung control ng A over B. Yung date, closing date naman of acquisition, kailan natanggap ni B from A yung consideration, kabayaran. Now, usually, kung ano yung closing date ng acquisition, yun na rin ang date of acquisition. Ibig ko sabihin, natanggap na ni B yung consideration. So A, kapag tatanggap ko na, base ating usapan, ikaw na may control. Okay. Ikaw na may control. But it is not always na kung yung date, closing date, ayun na rin ang date of acquisition. Kasi meron pala silang agreement, written agreement na sabi ni B, hindi, nag-agree si A and B na even before date, closing date, pwede ka na mag-start ng control. So kung gano'n ang usapan nyo, hindi pa dumarating yung closing date, meron ng takeover ng control. Ang tawag natin ni date of acquisition. So in this case, nauna yung date of acquisition kaysa closing date of acquisition. O di kaya, ang usapan, written, meron tayong usapang date, closing date of acquisition. Closing date of acquisition. But ang usapan natin, yung iyong takeover ng control ay later. Tanggap ko muna ang consideration, yung control mo later. Yan man ang usapan. Ayun ang usapan eh. Written agreement. So kung ganon, mas nauna yung closing date of acquisition, later yung control or date of acquisition. So, magkaiba yun. Ang dalawa. I mean, yung closing date of acquisition is not always the same as the date of acquisition. Okay. Now, we go to the area na ni-report ni Ray. Can you please read again that caption, stock issuance cost? Okay. So, no, pinabasa ko to sa iyo kasi maraming problems coming, sa auditing. Na babalikan mo to, no? Babalikan mo to. Sinasabi dito, Now, alam naman natin yung cost and expenses. Kapag ang entity na incur yan, you debit. Anong yung i-credit? Siyempre, yung cash or payable. Huh? Okay. So, now normally, ulitin ko, ang ginagawa natin ay i-debit the cost or expense and credit the cash or payable. Normally, yun ang ginagawa natin. But this is stock issuance cost. No? Hindi masusunod yung format na yon. Now, from this paragraph, sinasabi dito, nagkaroon ng stock issuance cost. No? Siyempre, magkay-credit ka ng cash kasi lubos yung cost eh. O di kaya, yung credit payable. Pero sinasabi dito, ang dapat mong i-debit ay share premium. Share premium ang dapat mong i-debit. Hindi cost and expenses. Ang i-debit mo ay share premium. Di ba yung share premium, yan ang bagong term doon sa old term na additional paid-in capital. Additional paid-in capital. So yung normal yung ginagawa nating debit, cost, and expense, and credit, cash or payable, ang i-debit mo, because this is stock issuance cost, you debit share premium, issuance, or the old term, additional paid-in capital. Okay. Sinasabi rin dito na, paano kung yung cash ay 1 million, then lumabas. Masyado malaki yung 1 million, no? 100,000 ang lumabas. So, you credit cash. Tapos nakita mo, yung ide-debit mo na share premium, ang nakabook, 30,000 lang. So, credit the cash, 100,000. Debit the share premium, 30,000. 30,000 lang yung nakabook eh. Ano pa yun? Ano bang ide-debit mo? Ano yung ide-debit mong 70? Saan mo kukuhanin? Sabi dito, you debit retained earnings. You debit retained earnings. Okay. So that very important paragraph na nasa auditing problems yan. Okay. Another question, Ray. Dito sa business combination or kunyari X acquiring Y. Now there are times na makaka-encounter tayo ng goodwill. There are times. Not always. There are times na makaka-encounter tayo ng goodwill. Tanong ko, kailan tayo magre-recognize ng goodwill? Kailan tayo hindi magre-recognize ng goodwill? Okay. In the first place, kailan ba nagkakaroon ng goodwill? Okay. Now, marahil yung binibili mong company, pag nakita mo yung kanyang financial statements, meron ng goodwill. Tapos, binili mo. Nung binili mo siya, ang fair market value ay 70. Pero pumayag ka na bilhin yon at 80. So, mas malaki yung iyong ibinayad kaysa sa fair market value ng iyong binili by 10 million. Yun, goodwill din yun, di ba? May goodwill, yung libro ng bumili. Kaya ng goodwill. Tanong ko rin, now, we are accounting the business combination. Kailan ka mag-recognize ng goodwill? Kailan ka naman hindi magre-recognize ng goodwill? Kung tayo ay nasa business combination, sa ating accounting, nakakakita tayo ng goodwill. Kailan tayo mag-recognize, magbubuk ng goodwill? Kailan hindi? That is correct. You answered one of my questions. Kailan naman ako hindi mag-recognize ng goodwill? Okay? So that is one answer. And another answer, Rain, is kung yung goodwill na nakikita mo ay nasa libro ng acquiree at ikaw ay nag-business combination, aba, ignore mo yun. Ignore mo yun. Goodwill, nasa book ng acquiree, mawawala na yun. Papalitan niyo ng goodwill after business combination. Kung merong goodwill, at yung sagot mo, no? Depende sa kapag mababa yung acquisition consideration kaysa sa market value ng net assets ng acquiree. Ito ang tinatawag na bargain purchase. Okay. What else? Last question. Okay. Rain, tanong. So yung acquirer A, in-acquire si entity B. Ang ibinabayad ni A kay ang binabayad ni A sa B ay lupa. Now, the first rule is that kung ibabayad ang lupa, dapat i-recognize, i-book yung lupa at fair market value. That is the first rule. But not always, ano? Pwede mo rin siyang i-recognize or i-book not at the fair market value, but at the carrying value of the land. Pwede rin yun. Tanong ko sa iyo, Ray. Kailan mo dapat i-recognize, i-book ang land at fair market value? Kailan mo siya dapat i-recognize, i-book at carrying value? Kapag nagkakaroon, in case A acquiring B. Hindi mo naintindihan. Okay. Now again, A acquiring B. Ang consideration na ibabayad ni A, lupa. So the first rule is, magkano yung lupa? The first rule is, at fair market value ng lupa. But not always. Pwede mo rin sagutin sa tanong, magkano yung lupa? Ang isasagot mo ay yung carrying value ng lupa. Ang tanong ko ngayon ay, kailan nagiging tama na ang valuation mo ng lupa is at fair market value? At kailan naman nagiging tama na ang valuation mo ng lupa ay carrying value? Kapag A acquiring B. Rain. Okay, sagutin ko na yung tanong. Kapag doon sa bilihan, ang ibinabayad ay lupa, at yung lupang yun ay ultimately, mapupunta doon sa mga former owners ng company B. Iba-value mo yung iyong lupa at fair market value. At fair market value. Pero hindi naman always na yung lupa mapupunta doon sa former owners. Pwede naman ang usapan na hindi. Kasi mapupunta yung lupa na nasa part ng consideration. Ayun, maiwan pa rin sa B. Kasi consolidation, hindi naman merger. Tuloy pa rin ang operation ng B. Pero control na ng A. Ay yung lupa, magiging pag-aari na ni B. In that case, yung valuation ng lupa mo at carrying value. Hindi at fair market value. Diba? Binasa ko lang yung ni-report mo, Ray. Kasi sabi mo dito, non-financial assets transferred. Eh bang example ng non-financial asset ay di lupa. Tapos meron ka pang illustration dito, 13.3. Na yung lupa, property, ay sa carrying value. Carrying value kasi hindi ibabayad sa hindi mapupunta ultimately sa former owners ng company in-acquire. Kundi mapupunta, maiiwan doon sa acquiring entity. Okay. O class, nakikita na niyo, no? Kapag ganyan ang tanong sa board, hirap pumasa, no? Ang hirap tumama ng computation. O compute sa iyo. Okay. Now, we go to the last number of our program. And that is, okay, open your camera. Ating photographer.